Truth is, I thought it mattered. I thought that
money
mattered. But does it bollocks? Not compared to how people matter.
Welcome, mention and other fine folks, to the Someday Dispatch of the Black Letter, where we contemplate thoughts worth thinking as we try to navigate through this upside-down, topsy-turvy world to greener pastures on the other side, hopefully wealthier, wiser, and healthier. We've got a bunch of things on the agenda today. We'll look at some mortgages, lumber as well. The United States Postal Service has just patented a blockchain for voting, which is quite interesting. And then we'll take a look at a little bit of early discourse from Satoshi Nakamoto, the creator of Bitcoin, and see what that's all about. And of course, we'll check on the market. So let's get going. Sovereign Man here. This is one of the single biggest threats to the dollar today. So this is mostly an opinion piece, but you can read through it if you'd like. I just wanted to bring your attention to a couple of items basically at the bottom here, where he sort of lists, or she lists, her crux of the argument, if you will. And as you can see, it's a bit of a longer piece, an opinion piece, so it's interesting. But what I really wanted to grab down here was this sort of conclusion. Conflict with China is by far one of the single biggest threats to the dollar. So it's worth paying attention to because, as the last Cold War proved, it can escalate rapidly and persist for decades. So the argument here is that one of the single biggest threats to the dollar today, obviously, is being China. And it goes back, the article talks about, Simon Black here talks about World War II, US and Russia relations practically since the 1920s, when they were not too bad. And of course, as we know, during the World War II, Russia and America were allies during the Second World War. And of course, shortly after that, then things turned sideways, and we got the Cold War. And as I understand it, in some instances, we came very close to an actual hot war, if you will, during the Cuban Missile Crisis, as most of you will probably understand. Of course, Simon Black here seems to think that there's similarly happening with the US and China at the moment, China being the world's upcoming power and the United States being the declining power. And of course, with Trump and Xi in the presidential suites in both countries, of course, we have a tinderbox that could happen here at any point. And we're already starting to see that with some of the tariffs and bans of different Chinese companies and enterprises, etc., etc. So it's going to be interesting to watch. I'm not sure that this is the one of the biggest threats to the dollar. I think United States and the Fed, the federales and the banksters are doing a fine job of threatening the dollar as a reserve currency just on their own. I don't think they need China's help or a war to, in fact, seal that coffin. But nevertheless, interesting idea. Now, of course, I do believe that there are real legitimate concerns with the relationships between US and China, and that could have, of course, obvious outcomes that would not be good to the markets or for the general global economy, really. I mean, a world war, another war between two mighty powers is not going to be something that's going to be relished by most folks, that's for certain. So keep your ears to the ground, folks, because I think we could be having at least a Cold War, or we're already in a Cold War with China. And of course, with South China Sea becoming an issue, this could escalate rather quickly, depending on a variety of factors, of course. On Wolf Street here, we have alarm bells ring over refinance mortgage boom, why refis are so risky. So the mortgage industry is in an uproar over the surprise announcement by Fannie Mae and Freddie Mac, the GSEs, which is government-sponsored enterprises, Wednesday night that they would charge a 0.5% adverse market refinance fee on refinance mortgages that they buy. A quick tip here on how to figure out where somebody stands on an issue is to first understand if there is any income or money that they'll get from being on a particular side of an issue. And if there is, of course, then you can pretty much figure out what their position is going to be. I mean, people are so transparent and fickle that way, it's pretty obvious. The fee is designed to reduce potential losses for taxpayers that back the GSEs, obviously, and that's a good thing. Refis carry a lot higher risk than purchase mortgages, and I'll talk about that in a moment. This fee will be effective September 1st. To refinance a $500,000 mortgage, the fee would amount to $2,500. It's not the end of the world. And of course, these folks, the mortgage industry, of course, rely on getting mortgages. That's how they make their money. So, of course, they're going to be opposed to anything that might put a bit of a damper on folks seeking out mortgages. So who profited from the refi boom and who carries the risk? So 20 lobbying groups representing the mortgage and real estate industry. So are opposing the fee. And of course, these folks, as it says here, don't represent anyone but their clients in the mortgage and real estate industry. And their clients, of course, are mortgage bankers, mortgage brokers, real estate brokers, home builders, and others. And these clients have all hugely profited from the refi boom. Boom. So there you go, folks. That's why they're opposing this, because their money, their income is going to be perhaps curtailed to a small amount. And none of the clients of these lobbying groups carry the risks of these refi mortgages. Those who carry the risks are you and me, exactly the taxpayer here, as he says. And of course, this then argument then triggered two counterpunches from the American Enterprise Institute's Housing Center, where they think this is a great idea. They talked about the housing lobby has described the GSE's imposition of a new half-point market adjustment fee to offset risk on refinance loans as outrageous, a cash grab, and based on jealousy, greed, and disdain. Nothing could be further from reality, the AEI's first statement said. The GSEs are already strung out on refi mortgages, according to the AEI. The GSE's share of the entire cash-out refinance market is now at 90%. They have a huge exposure to this, obviously. The GSE's share of the entire rate and term refinance market is now at 80%. The new half-point market adjustment fee is not only appropriate, but it would have been a dereliction of regulatory oversight not to have taken action, the AEI said. And I would have to agree. In other words, seemingly low-risk refis are as risky as much higher-risk mortgages, purchase mortgages. And he talks about the major reason why refis are so much riskier than purchase mortgages is the simple fact that there's no arm's-length transaction and no arm's-length purchase price that determines the value of the home. So, for example, you bought your home maybe a handful of years ago, and you think that it's you bought it, let's say, for $200,000, and maybe 5 years down the road, you think it's worth $220,000. So you get a refinance mortgage for, say, 65% of that, which means that they put on a lot more risk than if you just purchased it at a 90 to 95% loan-to-value ratio where proper due diligence and valuation was determined. This valuation risk has been further heightened by increased use of automated appraisal waivers that the GSEs use to decide when no appraisal is needed. Given that this tool is embedded in the GSE's automated underwriting systems and a loan may be submitted multiple times, the system is subject to gaming. So an interesting look into the inside of the housing market, if you will. And of course, I believe that pretty much everything is in a bubble right now, thanks to the federales, Powell and his cabal. The only thing pretty much that isn't in a bit of a overpriced valuation currently is perhaps gold, silver, and cryptocurrencies. But the stock market is at an all-time high. It's in bubble territory practically. Real estate's in bubble territory. Bonds are in bubble territory. I mean, everywhere you look, this whole market has been twisted into and contorted into all sorts of obscene levels, if you will. More on home prices. Soaring lumber prices hammer new home construction, so this is going to start increasing the price of homes, of course. And so this is also a little bit of inflation. So we're seeing inflation and perhaps deflation, although frankly, I'll be honest with you, I haven't seen deflation yet. Anything I'm buying seems to be going up in price. I'm not sure about you guys, but for me it's inflation, not deflation currently. Talks about a combination of factors led by reduced production and staffing at U.S. mills, the resurgence of COVID-19 in the southeast, and tariffs on Canadian lumber has cut supply so steeply that prices have spiked about 25 to 30% in the last couple of weeks. That is adding about $10,000 to the cost of every home Marano is working on, and Marano is a home builder. It's not just the wood either. Other key products for new homes, from toilets, tubs, and showers to cabinets and electrical equipment to roofing, siding, windows, and flooring, have also been in short supply and so are going up in price, no doubt, and so we're seeing more inflation. Since early April, the price of lumber in North America has more than doubled. The market is at record highs right now and climbing higher still, he said. We've not seen this kind of volatility in any kind of record run in the past. It's hard to see anything that will stop it. And this is Sean Church of the Random Lengths, editor of Random Lengths. So what caused this? And they go through a couple of the different things as we spoke about earlier. So COVID-19 and curtailed production, obviously, when everything was locked down. So that created supplies in the lumber yards, in the forestry industry, as folks weren't working. Unexpected high demand because folks were at home, and so they wanted to do decks and fences and maybe all these little projects at home as well, creating a demand crisis on lumber to some degree. And then a lack of workers, of course, which is only now getting back to normal. And then, of course, lastly, tariffs. So, we keep seeing examples of inflation. We keep seeing examples of housing bubbles and other bubbles in the stock market. It's going to have to be a great unwinding at some point. I'm not sure when that'll be, but I think it's coming either the end of this year or into early next year. The United States Postal Service just filed a patent for a blockchain-based secure voting system. The reason I like this article is because it gives you a sense of how important blockchain is going to become in the future. And we spoke about yesterday, Canada's Revenue Agency having been hacked. And as I had suggested, I thought that perhaps blockchain could be an ideal solution for something along these lines. And of course, here's the Postal Service putting through a patent to develop a blockchain for voting purposes. So it's starting to happen, folks. It has recently been unearthed that the USPS filed for a patent on February 7, 2020 for a secure voting system that uses a blockchain access layer. Obviously, this could be one of the strongest signals of a welcome adoption to blockchain by the US government. And of course, this was before the coronavirus hit, as we know. In some embodiments, a blockchain allows the tracking of the various types of necessary data in a way that is secure and allows others to easily confirm that data has not been altered. The application was filed before the coronavirus had wreaked total havoc on the country, as I had just pointed out. And so there's the article. You can read the whole thing if you're interested in it. I'm not that interested in getting into the weeds, but it's encouraging to see that quasi-government institutions are starting to see the value of blockchain. And of course, when blockchain becomes more valuable, then I think especially Bitcoin and perhaps some of the other cryptocurrencies that are developed on these blockchains should increase in value as well. Mortgage delinquencies spike in the second quarter of 2020. So here we are talking about homes reaching all-time highs, lumber shortage, and of course now we're starting to see the delinquencies happen. The delinquency rate for mortgage loans on 1 to 4 unit residential properties increased by a seasonally adjusted rate of 8.22% of all loans. The delinquency rate increased 386 basis points, or rather 3.86%, from the first quarter of 2020 and was up 3.69% from 1 year ago. There was also a movement of loans to later stages of delinquency, with the 60-day delinquency rate reaching a new survey high and the 90-plus day delinquency rate climbing to its highest level since the third quarter of 2010. However, there's a positive note here that 30-day delinquencies dropped in the second quarter. And of course, then I try to put a nice spin on that, but I think that's just an anomaly. We'll continue to see this increase, I'm sure, because folks are going to continue to be losing jobs. I'm certain of that throughout the year and perhaps into next year as well. And we're going to have very few of these jobs coming back. Mortgage delinquencies track closely with the availability of jobs. There you go. And there's the more key findings if you're interested. Folks, I think this is just the early innings of these mortgage delinquencies. We're going to see rents not being paid too. We're going to see evictions increase. Job losses are going to start increasing now that all these stopgap measurements are rolling off the table. No longer do employers have to keep their employees, because I think, or is that happening perhaps 1st of September? But either it's already happened or is going to happen 1st of September, where those PPP loans can be forgiven if the employers had kept on staff. And of course, after that point, and let's say 1st of September, they no longer have to keep their employees and they still get to keep that money for free, right? So we're going to see a lot of new unemployment claims, I'm sure, in the coming weeks and months. Okay, the Daily Hodl. Satoshi Nakamoto's biggest argument for Bitcoin goes viral as top crypto tackles yearly high. And of course, we know this. We've read the white paper together, so you can have a look at, you'll remember this from having us go through the white paper earlier. Nevertheless, some interesting points here. Reddit user Slywalkers posted a screenshot of one of Nakamoto's early emails to cryptography mailing list, which shows why the mysterious Bitcoin creator believed the peer-to-peer electronic cash system can be revolutionary on a global political scale. Satoshi Nakamoto, when asked, "You will not find a solution to political problems in cryptography." Yes, but we can win a major battle in the arms race and gain a new territory of freedom for several years. Governments are good at cutting off the heads of a centrally controlled network like Napster, but pure P2P networks or peer-to-peer, like Nutella and Tor, seem to be holding their own. Satoshi. In a subsequent email, the Bitcoin creator explains that he had to first complete the Bitcoin code and make sure that it would work before he wrote the white paper. I appreciate your questions, he said. I actually did this kind of backwards. I had to write all the code before I could convince myself that I could solve every problem. Then I wrote the paper. I think I will be able to release the code sooner than I could write a detailed spec. Nakamoto's Bitcoin white paper is free of politics, but indicates that he created the top cryptocurrency to remedy flaws in the traditional banking system. And you'll remember this from the white paper that we went through. Commerce on the internet has come to rely almost exclusively on financial institutions serving as trusted third parties. And worse than that, these middlemen are just gouging the rest of us, right? And in fact, stealing our wealth in some ways with all their fees and transaction costs. Completely non-reversible transactions are not really possible. The cost of mediation increases transaction costs. So what is needed is an electronic payment system based on cryptographic proof instead of trust. Transactions that are computationally impractical to reverse would protect sellers from fraud, and routine escrow mechanisms could easily be implemented to protect buyers. And of course, this is one of the great things I like about cryptocurrency, and Bitcoin particularly, is that it is that store of value. Not only that, it's increasing in value and probably will continue to do so in time, as it's the hardest asset we have currently. And of course, nobody knows and nobody can intervene with your transactions on that blockchain and with Bitcoin, which is one of the greatest things, especially when these leaders that we have are leading us astray. Okay, let's take a look at the markets. Okay, in the green again. Seems that everything is golden. Every day is green now. And it's trying to go for new highs. I'm not sure what the new high will be. Let's take a look, see if we can figure that out, where the high was here on the S&P 500. Yeah, it's at a new high now. So there you go, folks. Things are just great. And if we do year to date, it's up 4%. Yeah, you can see it's over the old high, which was at, I think that was at 33.86. Now we're at 33.92. So everything's great. We're on a new bull run, folks. Nothing to see here. The world is doing fantastically well. If you don't have a job, that's too bad. Obviously, you're not partaking in this great bull market that we have for the one percenters. Okay, let's take a look at gold. Here's the gold chart again. Also increasing, up 31% year to date, and coming up on its recent all-time high here. So we'll see how that continues on. I imagine we will get over that probably this week or next week. Probably we'll reach that new high. We'll retest it, perhaps bounce back off of it before we blast through it. That would be my impression. And anything gold can do, silver can do better. So you can see silver here up again, 59% year to date, and very close to its recent high. So we'll see, keep an eye on that. This will probably be broken through this week for certain, as long as gold and silver continue to move upwards. And of course, 59.24%, as we know earlier, a week or two ago, we looked at which was the best performing asset class currently year to date, and it was silver. But let's take a look how Bitcoin is done, because Bitcoin's run up a little bit. Let's see if Bitcoin is giving silver a run for its money. Okay, and here we are, folks. As you can see, I've drawn a box here from basically the start of the year. This is a year-to-date chart up to where we are currently, as you can see, and that amount is 70%. So here we go. See, Bitcoin will have none of silver's race to the top. And now, of course, Bitcoin has taken the lead in being the best performing asset year to date. Let's have a look at the other cryptocurrencies. Okay, up just a little over 1%. Last 24 hours, $319 billion market cap, 5,846 coins. Sort of a mixed bag here, as you can see. The last 24 hours, Bitcoin's up, Ethereum and XRP is down. Chainlink is down substantially, but then again, it did have a huge run up. You would expect that. Some of the others, Litecoin up a bit as well, which is good to see. I have the Litecoin, as you know. Stellar down about almost 4%, whereas Bitcoin Cash down 0.2%, so it's not too bad. Some of these other coins, Monero doing well still. Generally, sort of mixed bag, as you can see. So NEM up 14%. I'm not familiar with that coin. Basic Attention Token, which is what you can earn from Brave Browser, is up almost 14%, so that's not bad. Okay, folks, and on to the online oracle, our trusty sidekick, the 8-Ball Economist. Okay, so one of the first articles, well, actually the first article we had a look at, you'll remember this one here. This is one of the single biggest threats to the US dollar today. It was talking about the relationships between China and the United States. So I thought I'd make an interesting question for the 8-Ball Economist. Will China and the US go to war before the end of this decade? Let's see what the 8 ball thinks. I think there's a good potential of that happening. Yes, definitely. Okay, I don't really like the confidence in that particular answer, but there you have it. The online oracle thinks that by 2030, or the end of 2029 rather, China and the US will go to war. So that's very interesting. And of course, this could be, I didn't specify what type of war. Maybe it'll continue to be a Cold War or a technological war, or an economic war, but it could be a hot war as well. Well, I guess we'll see. And of course, this is just the 8-ball economist, so it's at coin cost, really. But we'll see. It's interesting. It's a concern I have slightly. We see the degrading relationships between the two countries. And Ray Dalio talks about this great reset coming as empires sort of sunset, if you will. And we've seen that in the United States. And often that has happened, I think, most times in history, that what has followed that great sort of changeover in the global economic and power structure, if you will, is a war between two dominant or one dominant superpower and an up-and-coming superpower. So we saw that back in World War II, I think, and other areas as well. So it's something to keep an eye on. We'll see what happens. In the meantime, there's not much we can do about that, so we need to keep the peace and be kind and calm out there, save some money, pay down debt, of course, and try and get through this together. So thanks so much for joining me. I appreciate you. Hope you stay well. Keep healthy out there. Get some exercise. And we'll get through this debacle in short order. Thanks so much for joining me. Remember, Dom Spiro, Sparrow.